what would I feel like if I lost my job, if my business went down in value, an economic recessionary kind of effect, and I had the money in my 401k versus I have $833 a month in passive income coming in.
This podcast is for informational purposes only and does not constitute financial, legal, or investment advice. Please consult a professional advisor before making decisions based on what you hear on this show.
Welcome back, Trav, to another Roundtable podcast. I'm sitting with my partner, Mr. Joe Murray. Good to see you again, Stallion.
Always a pleasure.
Across the table, I've got Jamie O'Brien. Welcome back, Jamie.
Glad to be here. Thanks for having me again.
Yeah, and our active passive income master, Mr. Ben Busick. Good to see you.
Oh, that's too kind of a words, but great to be back. Thank you.
Well, you got your passive income shirt on. All right.
Well, mastermind.
Exactly. So here's where we want to start the topic today is there's probably a decision that maybe you were considering making in 2024, but you didn't, and you're reevaluating that in light of changes that have happened in 2025. And we thought this would be a good podcast topic for us to break down maybe potentially 5 of the top ones that maybe you considered in 2024 but didn't make, and give you different angles of it. Maybe that it would help you in the decision making to either affirm, hey, I made the right decision by not doing something, or I didn't consider that element of it, and maybe it could help me with the decision I'm making today. As always, we're not giving you financial advice. You need to seek someone individually with your circumstances prior to doing anything. These are just our opinions, and we like our opinions, so we'll give them freely on this podcast.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out, how does this all connect into my own personal system?
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before. Go to what'swhatwallstreet.com/PIOS.
All right, gentlemen, let's talk about the 5 elements really quickly. So one is we're going to cover taking money out of retirement accounts as one of the elements somebody may have been evaluating in 2024 and didn't. Maybe they were considering starting a business, number 2. Number 3, they were considering maybe getting an equity line against their homes for maybe liquidity purposes. 4, they evaluated but didn't start or expand their infinite banking systems. Or 5, they were thinking about, how do I invest outside of the stock market, right? So I want to kind of come around the table as we break this down and try to see what are the best money moves that they didn't make, but maybe they should, or considered different elements of that. So let's get real with this. What's something that you were on the fence about, Jamie, maybe in 2024, that you're considering differently now?
Man, there's something that I've been on the fence about that I wish I would have done several years ago, but that's getting a home equity line of credit, right? And I think that's a big one that a lot of people think about doing, but never take action on doing until potentially it's too late to even get that line of credit. And so I know we're going to dig into that a little bit more, but that's one that I've been on the fence about and really wish I would have done a few years back.
All right. Ben, what is a mindset or a misconception that you think keeps people paralyzed or kept people paralyzed in 2024?
Yeah, that's a great question. And I think it's just going back to people were comfortable with the status quo. We had been in such a boom growth, market since really the last Great Recession. You had a little bump with COVID, but at the end of the day, people were just accustomed to easy money in the markets. And why rock the boat, right? Why disrupt that 401k that may or may not be growing? It was looking strong, right? But now that the same boat is feeling shaky, people are realizing that maybe it was built on sand versus, concrete or something more structurally sound. Yeah, and we dive a little bit more into depth of that in the future.
Yeah. If someone felt stuck in 2024, how would you reframe their thinking going into this year as we sit in April 2025?
Well, first of all, I want to share like a really quick anecdote from a conversation I had with a friend of mine. Um, over 4 years ago, we were talking about his job, and he was saying, "Man, I really just don't love it, but I'm afraid because there was just a change in the presidency that if I make a move now, I'll be low man on the totem pole. And what happens if the economy tanks? Now I'm looking for a job in a really bad market. I'd rather just stay where I'm at and, put up with it." Well, fast forward 4 years later, in the last 2 months, we had the same conversation and he had the same answer. "I don't want to make a move now because I don't know what these tariffs are going to do. I mean, there's a lot of uncertainty. And what if I make a move and I'm the low man on the totem pole?" And you get the point. It's the same conversation. I'm also going to give you what we just talked to somebody about, and he did a very um, I think, valuable step that maybe if you're stuck in this position, you can do too. He said, drew out two different lines from 0 to 10. On the left hand side, he said, by making this money move or by making this, one of the things we're talking about today, what's the worst that it could be? What would be a 10 on the scale of the worst thing that could happen? Like I go to jail, I get, I go bankrupt, like whatever that case is. And you're going to just give yourself a subjective way to say, I think it's a 3 or I think it's a 10. Like just put something down there. And then on the second line, he said from 0 to 10, right on there, what at a 10, what is the best thing that can happen? And he said, "Man, maybe I am living the life of my dreams. I'm more generous than I could ever imagine. My family is at the best possible position," whatever the case is. He said, if you mark those two numbers, now you can make a pretty objective decision versus a very emotional decision that gets stuck in your brain and you just can't move past it. So that's my kind of just quick take on something that maybe could help you get unstuck as we unlock some of these things people didn't move on.
That's a great framework. Two things. One, write down what's the worst thing that can happen to you. And make number 10, dying, going bankrupt, right? I think sometimes people on that first line are like, I might lose money. That's a 10, like, and that is the worst case scenario, right? Like, I'm not saying that losing money is not bad, but what is the worst thing? And then the opposite is what is the best thing? What is the best possible outcome? I love that framework. So good. If you haven't done that, whenever you're considering a decision, that would be a great framework to use. Why is now a good time for us to be evaluating some of these bigger money decisions? Well, we've had, as you mentioned earlier, a lot of change in the marketplace, right? We've had a change of presidency. We've had a change of, the policies that are out there. As a result, we've had a reframing of how the markets, right, and markets are in general, how they're acting and reacting to these decisions. And then in our individual circumstances, it affects all of us differently. Some people are prospering during this situation, some people are not. So you need to evaluate your situation. So I want to kind of take this and let's go into these 5 areas that we've talked about where these are questions that people are asking all the time. We just grew up the top 5. There were several others that didn't make the list, but let's start with the first one. Someone was considering, Jamie, in 2024, taking money out of a retirement account, and they didn't. What were some of the things that they were probably considering then that now, as they look at it, maybe have made different decisions or have thought about it differently in light of the changes?
Yeah, I mean, I think in 2024, people were kind of staying inside while the storm passed, right? We just talked about all the uncertainty there. I actually looked it up. Gallup did a poll that I think financial security or confidence was at an all-time low or had been really low and has jumped 10 or 12 points, I think, in 2025. But we're seeing that when we put money in places we can't control, that we're riding a roller coaster, right? We're not on a lifeboat. We're just riding this roller coaster of having to deal with the market. So I think there's a deeper fear that is creeping in for people with inflation, with the unknown that's still kind of hanging out there of having their capital tied up somewhere they can't control, right? And when people feel powerless over their own money, they don't do anything. right? And the biggest thing I hear is I don't want to pay the 10% penalty, or I don't want to pay the taxes now. Well, I mean, you're going to pay taxes on this anyways if you were to pull money out. It's just when are you going to pay it and how much you're going to pay at that point in time. And then I think the 10% penalty is starting to wash over people's heads because they've probably lost more than 10% in the last few months, right? They've watched that value of their retirement accounts decline. And that is a scary thought to pull money out of 401k, but what's more scary, I guess I would ask our audience, is having money somewhere where you have absolutely no control over what happens to it, or controlling that money and putting it to work for your financial future where you have ultimate control. And for some people, that ultimate control might be scarier. So not here to tell you what to do with your money, but I think that's probably some thoughts based on conversation I've had with some clients around that conversation of pulling money out of retirement plans.
Russ, I want to kind of mention something else in light of what Jamie just said. Everything that we're going to talk about today, I want to give you another framework. Man, today's like the framework episode for me. I don't know what's going on. But I want you to think about the way we talked about the two lines just a minute ago and where you might be stuck. I want you to think about every single one of these ideas has an invisible seesaw. Okay, think about the invisible seesaw. There's a known or a visible picture of, hey, there's a 10% penalty if I take money out of my 401k. Hey, I have to pay tax on the money that I pay out of, take out of my 401k or my IRA or whatever the case is. But what's the invisible other side? Well, to your point, Jamie, maybe my account was up 20% last year and now it's down the 20%. Did I really, like, is this funny money that we're talking about? Like, is and the other part that's invisible is what could that money have produced? And I'll give you another way to think about it. If my money is sitting in an up and down volatile place that I don't know or control, then I can't really keep score until I compare that to what if I had, let's just say, I'm just going to give a really hypothetical thing. If I had 100,000 in my 401k and I had 100,000 outside of my 401k, what could that 100,000 have gone to do? Well, I can just give you a very simple analogy. There are all sorts of different vehicles that will pay you 10% on that 100,000. That's $833 a month in cash flow to you in just interest. Okay. Now I want you to emotionally consider, what would I feel like if I lost my job, if my business went down in value, if fill in the blank, an economic recessionary kind of effect, and I had the money in my 401k versus I have $833 a month in passive income coming in. Which one would put me in an advantageous position? Which one would put me emotionally in a better position? And then it becomes a lot clearer to then say, is the 10% really the thing that's holding me up? Or is it not knowing what to do with the money when it gets out? All right. So that's
I
a
want to take the,
framework I just want people to think about, is there's always two sides.
well, I want to take the other side of this. Not that I truly believe this, but I do think as someone was evaluating whether or not to take money out of their accounts, their retirement accounts in 2024, and they're seeing it now in 2025. If you went to your HR director and asked them, could you actually do it? And they said no, that would be a reason why you wouldn't do it, right? Like, I mean, that's a reality because Joey, you had that happen. You went to your HR person and said, hey, I want to take out all my 401k money. And they're like, well, you can't do that till you leave. And you're like, just stand still. I'll be back. I'll be back with that notice pretty soon, right? Like that was a thing. And that's where people are. Secondly, people have not pulled it out because they have not done the thing you mentioned, that they've not learned how to invest, because taking it out doesn't make it automatically better, right? Like just because you take it out and you go invest it outside of the stock market doesn't mean that you'll actually make money. I mean, there's people right now that are listening to this who, and us included, who've invested money outside the stock market and poof, gone, right? I mean, it's Puff the Magic Dragon out there. So if you don't learn how to invest, it can go just the other way just as fast, right? So there's another side as you're evaluating when are you going to do it. So ultimately what you were saying, Joey, is if you want to create streams of income, if that is the objective, the retirement account cannot do that. It cannot create streams of income for you while you are under the age of 59 and a half. And I'm assuming you're listening to this. Most of you are underneath that age. And if you're trying to become financially free where your passive income exceeds monthly expenses, that's only that's the number one reason on the list. It shouldn't be penalties. It shouldn't be market volatility. It should be, I want to be financially free as fast as possible. And the item in which I'm investing in, the wrapper, the investment vehicle is not allowing me to do that. So it's
Right.
not about good or bad, great market, bad markets. It just can't get you there, right? So it's like trying to drive a car to Europe, right? Cars are not bad, but you're going to have a really hard time driving a car across the Atlantic Ocean, right? So like there's what we're trying to say is that the 401k in this situation, you're trying to get to Europe and Europe is becoming financially free, then a car is not going to be the vehicle to get you. Changing vehicles potentially can help you get there, but you're
Sure.
going to have to learn how to do that. All right, let's go to the second one on the list. We talked about starting a business. So Joey, somebody's considering, or reevaluating the decision not to start a business in 2024. What are some of the elements that are topping the list right now?
I think the reason why people hesitated in 2024 was for some of the same reason we've already mentioned, and I think primarily the political environment, the unknown about what the future would be, because whoever takes that presidential spot is going to make a massive difference on the outlook that somebody was having on building a business. They know the early years are the hardest years of any business. Unfortunately, I think somebody today may have started out. If we're having this conversation in January, there's no question the consumer confidence was through the roof. There was all this kind of future planning going on, and people were getting back into the different real estate markets and everything else. Talking today, we're in April 2025. All of a sudden, the fears and the uncertainty around tariffs are absolutely affecting people's decision to start a business, particularly in any sort of e-commerce or anything that's in the physical kind of product space. People are like, well, I don't know. I even had a conversation the other day with somebody who's in the space, and he said, hey, we proactively were able to, keep some costs down on some potential tariffs that we knew about. But what we're also getting now is we're getting things that were kind of done after the fact. And they're trying to collect on things that we already had kind of paid for in advance. And so that's throwing off our margins and things of that nature. So I don't want to say that there's definitely reasons to be concerned or to consider this, but I would also say that there's never been a perfect time to start a business. I mean, we talk all the time, Russ, and you said your wife started a dental practice in the end of 2008. And yeah, it wasn't ideal, but there's also has to be a point where if you want to pursue freedom, there is a necessity to start betting on yourself and not to continue just down the same path and expect a different result. So I mean, you guys can kind of suss this
Uh,
out with me, but I just want to
Ben,
that's
you
where
want
I'm
to take
at.
the other side of that? So Joey tried to like ride the fence here at the end, but I'm going to hold him on his first point. He said people who have thought about evaluating or starting a business in 2024 have reevaluated I'm going to pause because of a lot of the tariff stuff. You say, no, I think people are reevaluating this and are wanting to start a business. Why?
Yeah. So great question. And, in our passive income lab and also in working with some of our mastermind clients as well, I talk to a lot of folks and it's funny because, well, maybe it's not funny, but it's interesting that so many people default to the I'm busy piece of this. And so I hear it time and time again, and it's really just when we unpack that everybody still has 24 hours in the day. Like we all have the exact same amounts. And so it's interesting that somebody may be more or less busy than somebody else. Regardless, when we're talking about specifically with businesses in 2024, everybody was so busy because they were prosperous. In 2025, what I'm hearing is people are busy because they're almost scrambling, trying to latch on to something that's stable because it's been very uh, I mean, I can't think of the word, but ups and downs, kind of a thing. It's one of those times where
Volatile.
yeah, volatile. Thank you. Yeah, the markets are volatile. Economics are volatile. When we're talking about people starting a business, maybe in e-commerce, and it's on the product side, there's a lot of concerns about tariffs and the cost of that, cost of goods, how they're going to get them shipped to the States so they can sell them. Um, I don't know if that is 100% different than 2024 as far as the threat of tariffs, the threat of wars across the globe. So I just have sensed from a lot of our clients that 2025 seems like a year to take action because to Joy's point earlier, it's going to continue to be the same. Jim Rohn would always say like it's the same. Like there's the photo of the people in the 1900s riding a train, not paying attention to anybody, but they're all reading the newspaper. And now in the 2000s, it's the same picture. Everybody's on the train, not paying attention to anybody else, but they're on their phones instead of a newspaper. It's the same thing.
Well, I want to jump in here because Joey, you took the side that people are not starting a business. Ben, you started to say, "Hey, I think people are." I'm going to add an element to why I think people are considering starting a business when they didn't last year. Using your initial point, Ben, in 2024 they felt more prosperous. Now they feel a little more nervous. And if you've been in a W-2 position, maybe you changed jobs, you were the new person on the totem pole, and now you're seeing potentially the writing on the wall that your company may be doing some layoffs. And if that happens, you may be one of the first people to be gone. Then you want to take control. You want to figure out what's going to happen. I mean, why did my wife start a business at the end of 2008? Is that she was the low person on the totem pole at the dental practice she was at. And as an associate dentist, they decided not to keep growing. They said, "I'm sorry, we don't have enough slots." So then now she went to be an associate dentist somewhere else. And she said, "I don't ever want to go through that position again." I was like, well, the way we fix that is we start the business, right? Like you then get to control, for better, for worse, you get to control your future in this. And there's people right now, I think, that have been in a position where they've been subjected to the whims of the market and to the people that run the companies that they're in. Now they're saying, "Okay, I've learned, I've listened, I'm ready to take action." And they're starting, and they're going to use the fear in the market to actually motivate them and to move them to doing something. Now, should you do that smartly, right? Should you start a business that you're buying products out of China right now? Maybe not the best idea, right? But there's so many businesses you can get into that doesn't require that can prosper in this. And there's businesses that are going to be prospering in light of that. So I think that there's a definitely a flip side to that.
There was nothing worse than walking into class when you're in school and the teacher saying, "Pop quiz day." Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz. Hey, Wealth Without Wall Street family. If you're serious about building passive income through real estate, then you need to check out Dustin Heiner's podcast, Master Passive Income.
Yeah, Dustin retired himself at 37 years old using rental properties. And now he's teaching you how to do the very same thing step by step. If you're looking for real estate strategies that actually work, this is the podcast for you.
So go subscribe to Master Passive Income wherever you listen to podcasts and start building your path to financial freedom today. Go check it out now.
All right, let's move to the third point. We talked about people who were considering getting equity lines potentially of credit against their homes in 2024 and didn't. Jamie, let me let you in on the conversation. Which side of this do you want to take and why?
Man, I think HELOC, first of all, is not a debt sentence. right? I mean, you're not locked into actually using it. It's more there if you need it, right? I kind of think about a HELOC. I do a lot of real estate. It's like flood insurance, right? You need to get both of those while it's sunny because you can't get flood insurance when it's raining, right? When there's a flood. So HELOC's the same way. We're starting to see banks tighten down on regulations. So if you waited last year and you're still on the fence about this, I would say let's move fast while you still have the opportunity to get one. Right. Doesn't mean you have to go max it out and worry about paying that monthly interest fee, but it's an opportunity reserve, right? It's a place where you can access equity in your home should you need it for either emergencies or if an opportunity comes across your plate. We say it all the time here, opportunities find cash. If you're trying to learn how to be a better investor or you're trying to learn and take some of these ideas that we're talking about today, pulling money out or investing outside of the stock market, which we're going to get to, we've got to have cash to do that. We have to have access to capital, and a HELOC could be a great way to have access to capital, even if you're not using it immediately, because there may come a time where you can't even get the access. And I'd rather have the access than not have the access.
Joey, for those who don't even understand what a home equity line of credit is, you spent 11 years in the mortgage business. Can you give them some parameters, understanding of what that is, how it works?
Yeah, first of all, I need to clarify. Did you say a debt sentence, DEBT, or
Debt
debt?
sentence, a DEBT, debt.
Man,
Debt
that,
sentence.
that was so brilliant. I'm just going to give you props for that. Thank you. That was a great play on words. But I'll say this, to your point, a line of credit against your home is simply setting up an access point with a bank. You're saying, hey, I'm going to put up the collateral of this equity in my house. And just to give you an example, let's say you have an $800,000 house and you owe $400,000. You have $400,000 of available equity in that house. Now, the bank is not going to lend you, quote unquote, $400,000 against that equity. They may only give you 250 or 300. There, depends on the loan to value, the 80% or 90% or what have you. But the key to this is like having a large credit card against your home's equity that you've applied for before you needed it. To your point, Jamie, because once you need it, and let's say your credit has dropped, or let's say that you've lost your job and you go to apply to get access to that 400,000, then the bank's going to say, nope, we're not interested in lending to somebody who doesn't have the ability to repay, a provable way to pay us back. But when you have that, think about that. If you have a credit card in your pocket right now, does it require you to go and spend every dollar that's on that credit card?
There may be somebody in my house that would say differently, but yes.
It does it, right? Well, think about the line of credit against your house as simply that. I have the access, I have the availability. And here's the other thing, as we've been talking about this kind of theme of both sides of the coin, some people would hang up and they would say, or they would have a hang up on the fact that, oh, I have to pay interest to get access to this money, or I have to pay an annual fee to get access to this money. And I don't want to have to do that because there's a cost associated. But on the flip side, if you have become a better investor, and by the way, if you haven't, you need to join our passive income lab. It is ridiculous what we teach you in there. If you haven't done that, go to wealth.wallstreet.com/free call and talk to one of our team members about what that looks like. But if you are an investor and all of a sudden you have access to a couple $100,000, let's say, on this line of credit, and you have a deal that will pay you 10, 15, 20% or more on the access to that money, and it costs you 7% to get access to that money because of the equity line payment. The alternative is I didn't have access to that deal, and what did I lose? I lost all 20% of what was possible, right? So you have to start thinking not in scarcity and just cost. You have to start thinking and expanding your mind as what's possible. What would access to cash actually produce for me and my family?
All right, I'm going to continue to play the other side. You guys are just sticking on one side of the fence here, so I'm going to throw some rocks at you, right? Like somebody was evaluating getting a credit line in 2024, which Joey started to tell you about, which is nothing more than potentially a second mortgage. For some people who have a home paid off, it could be a first mortgage. and they're evaluating not doing it, they're affirming they're not doing it reasons. One, they lost their job. And the only way you can get an access to the line of credit is that you can prove that you can pay it back. So for a lot of reasons, people that have talked about why you would want a home equity line of credit against your house is that when you can pay it back, that's when you get approved for it. So that when you can't pay it back, you could actually use the money to help you in those moments. There was a time, Joey, where you had no income. Is when you left the mortgage world and came to work with me in this space. And there's no amount of equity you had in your house, real or fake, that a bank would have given you a loan against. So there's one reason why people would not be getting an equity line in 2025. They have no ability to repay it. Another reason why people may have said, hey, I'm going to wait in 2024 till 2025 to get this home equity line of credit. They were working off the assumption that rates were going to continue to come down, and rates have not come down.
Yep.
So maybe they've decided that I can't invest it somewhere else and outpace the interest rates because I haven't become a good enough investor. So if you were waiting for rates to come down and they have not come down, maybe that's one reason why you've decided it's not a good thing for you to do. A third thing that we haven't talked about is you mentioned loan to value, but what have we seen in real estate values as a whole? Real estate values have either plateaued or in some environments have come down, decreased, right? Rightly so, they were definitely over pumped with the amount of dollars chasing for your assets. So for some people, they assumed that their equity was going to be greater in 2025, and then they would qualify for maybe the 80% loan to value limits. But what has happened in 2025? Not only potentially has the value gone down, so your hypothetical equity has gone away, but also the loan to value requirements have gone down. So not only do you not have this hypothetical $400,000 of equity that you mentioned, Joey, but they're not going to give you an equity line for 80% of your total value. Maybe they only give you an equity line for 70%. So you can't get it. So these are all reasons that exist. Now, I understand what you guys were saying. What's all of those reasons somebody should have taken action in 2024, right? And if you happen to fall in the equation where these things are happening, but you still can do it, maybe you should. But I just want to help people see why people are not doing that on the other side of that.
Good point.
All right, let's move to point number 4, which is starting or expanding their infinite banking systems, Jamie. So somebody in 2024 was evaluating doing that, but didn't. And now they're reevaluating in 2025. What are some of those points?
Yeah, I mean, a lot of the same points of what we already talked about. I think in 24, a lot of people were just in wait and see mode, right? A infinite banking system, a whole life policy is a lifelong contract that has set premiums. The fun part is coaches like myself will work with you to figure out the premiums that make sense in your situation. We never wanted this to be a financial burden. We wanted it to be a tool to help you be successful. But still, that fear of the unknown, I think, was holding some people up from moving and taking action because of the commitment to the ongoing premiums. Now, after the elections, things have settled out a little bit with the volatility in market. I'm seeing people moving. In 25, it feels like they're acting with urgency, whether it's funding new policies or expanding on other family members. I think the fear of volatility is what's actually making people move towards IBC because they're looking for a more stable financial safe house, right? I think that's the biggest change I'm seeing is like, we were worried about volatility. Now we see volatility and people are realizing they have to take action.
I want to jump in on this one. So there's typically something that is keeping someone from taking action on getting started in infinite banking. And what I've heard over the years is, man, this is a very common thing. Hey, I was at a conference 8 years ago and I got introduced to infinite banking. And like, they're just getting started, present day. And they're like, I'm just kicking myself because something was holding me back, or I didn't dive into it. And now I've all this time that I've missed. But the reality is, and Jamie, I don't know if you can speak to this because you're the one on a day-to-day basis helping people set these systems up, and I'm grateful for it. But they get it wrong. It's not about just the 8 years that they've missed. right? It's what 8 years did they actually miss? It's not the last 8 years. It's the last 8 years of their
Of
lifespan.
their lifetime. Yeah.
And could you quantify that for somebody? Like, if I don't start today, I wait 8 years, or maybe it's just a year. I don't know what you want to do to quantify it, but what is the actual cost
Yeah.
on someone, a typical policy?
I looked at this, and so extrapolate this out 8 years, but I looked at what if we just waited a year? What if a 40-year-old male just waited 1 year to start a $50,000 a year policy? What would that look like for him over his lifetime? And you can make the argument the first 5 to 10 years, you don't feel that far behind, right? You will be behind, but you don't feel that far behind. Well, by the time he's 65, 25 years down the road, retirement age, you're $73,000 behind. Just same amount of money going in, just 1 year later, right? So 25 years down the road, we're $73,000 behind. By 85, right? 20 more years, thinking about potentially end of lifespan or later years of life, we're $168,000 behind in cash value and $200,000 behind in death benefit. So not only have you handcuffed yourself and potentially made a $167,000 mistake from a cash value standpoint, meaning the cash in the policy that you can use, but you've also chopped off $200,000 of legacy that could be left to the next generation. And that's just waiting 1 year, Joey. So extrapolate that over 8 years, and you could essentially multiply that number by 8.
One of the things I would say is someone who was considering it last year but didn't. What is the other side of that they're not doing it this year? A lot of these things, are just stacking on top of each other. They lost their income.
Yeah.
Hey, I was going to take my extra income, right? If they go through the passive income operating system, it teaches them how to restructure their cash flows. And then whatever is left over after active income coming into their account and they pay off all their monthly expenses, whatever's left over, that's the starting block, right? For building their passive income operating system, building their infinite banking system. Well, if that number has gone from a positive to a negative, that's one reason why they wouldn't do it, right? I mean, that's
Sure.
a very common reason. Secondly, someone who was considering to do it in 2024, unfortunately, he's had a health issue.
Mm.
And they went into the doctor, and now they have, a physical ailment that will prevent them from getting insurance. Most people don't necessarily think through this, but these life insurance companies we deal with do not accept everyone in. All right, there is an exclusive clause in there. They only are wanting healthy people, right? Like, this is the club that you want to be in when you can get in it. And it's the one you absolutely need to be in when you can't, right? And I think that there's people right now, unfortunately, who've had health issues that now they may be, they've been, diagnosed as a diabetic and they're out. They've had a heart issue, right?
Mhm.
Something that maybe not necessarily that a humongous thing, but a thing that the insurance company would say, sorry, can't do it. So those are things of reasons why someone was considering it. And now in 2025 are like, I still can't do it. And I know that there's lots of things that they can learn how to do, and working with coaches like yourselves, you guys can help them get over some of those humps. But, people are always asking, well, why is somebody still not doing it? Maybe they have not really learned what it's about, what it is and what it's not. They need to go and listen to all these different podcasts we've done on what it is and what it's not, and they still haven't learned it. And so they still have a framework of, hey, I thought it was a decent idea, but it still doesn't apply to me. And they're considering it as an investment, as a cash flow system, as a tool, right? They're thinking about it as, I'm going to invest in this or that. And so if they're still thinking that this is an or, and I'm going to invest in this or in the life insurance, they're probably still not going to do it because they haven't figured out that it's not an or. So those are all reasons why someone still may be in the I'm not going to do it bucket. All right, let's move to the last one we talked about. Was they were considering and maybe investing outside of the stock market in 2024, and now they're reevaluating that decision. Sal, you want to jump in here? What is one of the things that people are considering and why as a result of time that's happened since 2024?
I'll tell you that what happened in 2023 and 2024 is a lot of the alternative asset types because of increasing interest rates, I'm talking overnight, they went up 6 to 8 points, right? In just within about 6 months. This is unprecedented kind of increase. And the alternative asset space, whether you're talking about investing in manufactured homes, in mobile home, or excuse me, in multifamily, in storage, whatever, all those things are highly affected by interest rate environments. And what happened, you started to see some of the foolproof investments and I did air quotes, foolproof, in the alternative income space, alternative asset space, started to fall apart. And those deals imploded because they didn't factor the fact that those interest rates could go up at the rate that they did. So now you've got people that either stopped receiving distributions or two, had additional capital calls required of them just to keep the investment afloat so they didn't lose 100% of their money. And I think on the whole, that caused some people to kind of retract. Like, wait a minute, this isn't as kind of, foolproof as I thought it would be. Those are reasons why people have kind of hesitated investing outside of Wall Street. Now, on the flip side, they've also seen massive volatility in the markets, in the stock market. So at this point, I think people are reevaluating and saying, I got to choose my hard here. What's my hard going to be? Am I going to stay in a volatile, unknown, uncertain stock market and just kind of take my lumps and hope that it works out for the best and I eventually retire one day? Or am I going to become a very in-depth investor that knows how to read a PPM, that knows how to really evaluate the business plan, to look at factors that maybe they overlooked before, like the debt on that deal and the interest rate environment that it's being taken, and making sure that they're not getting themselves into some of these now known challenges that they may have not seen before. Those are my thoughts. I don't know what you want to add to that, Russ.
Yep. Ben, jump in there. I want to get your take on this.
Yeah. So here's a fun fact. The S&P 500 had 9 of its top 20 largest one-day gains, that's 9 out of 20, in history between Q1 of 2024 and Q1 of 2025. As an investor, that makes my stomach turn. Now, I realize none of us have crystal balls.
Say that one more time.
Yeah. So 9 of the top 20 one-day gains and losses in history, like since inception, happened between Q1 of 2024 and Q1 of 2025. That's significant. And I don't know about you, Russ, but I have zero, probably negative influence on any of that. Like I have no control over it. Neither does my wealth management person. Like they don't have control over that either. They're just doing the best they possibly can. So I would choose me. And so you started to talk about a little bit education. It all goes back to education, especially if you're going to go against maybe Uncle Jim's wisdom or Aunt Marie's wisdom of like doing something dangerous like real estate investing. Whatever against the grain thought process that is, because everybody just invests in the market. Well, I want to help everybody educate themselves on this. One of our mastermind members, Chris Larson, gave us a book to read. It's called The Secret Wealth Advantage by Akhil Patel. And in that book, the author talks about the 18.6 year cycle. And that cycle is been, he goes back way far back, like pre-America. And he talks about the 4 types of cycles: the recovery, the mid-cycle slowdown, the boom, and the bust. And if you follow that 18.6 year cycle, it's eerily crazy how it lines up with history. And guess where we are in that cycle right now?
Where?
We're hitting towards that bust. And not to scare anybody, don't go running the streets. And again, no crystal ball here, but I would highly encourage you to educate yourself and see what the resources like this book point out. Because if you understand that cycle, and it's all based off of the price of land, that's why I like investing in land. If you follow that cycle, in the next year or two, that's when that bust happens. And then we go back to recovery mode, just like in 2008 was the bust, 2008 and 9. And then the 09 from 12 was the recovery. So this is the perfect time for you to start looking in alternatives besides the stock market that people are telling you should just blindly follow.
Well, one of the things I would say is if someone who was considering investing outside the stock market in 2024 and is still saying, I don't know if I'm going to do it. What are some of the reasons behind that? One of the biggest reasons, based upon my experience as an investment advisor, is that now that their accounts have gone down in value, they're saying, I'm going to wait. I'm going to follow what Ben just said. I'm going to wait till it comes back up. Because if I sell today, I will lock in the loss and I will just wait. And I may wait 12 to 24 months, like you said. If it's magic, it comes back up. It always happens that way, goes back. What happens though if we're in that stagflation era, right? Like there was a time where the market stayed flat for 15 years and you did make money in the markets. Would someone regret that? I think so. But I would say that is the biggest reason why someone would probably, who was considering investing outside the markets, who's not, outside of what we've already talked about, haven't learned how to become an investor, don't know what their investor DNA is, haven't built an investor buy box, don't have a group of people around them that are helping them, coach them, get their first $500 of passive income, or are setting a vision for them, how to exceed it, being in a mastermind, all the things that people in our community on a regular basis are doing, is that they are considering, I will just wait. Once it goes back up, then I'll be able to take action on it. All right, gentlemen, this has been, I feel like a good topic for us to cover because I think these are just real items that people are dealing with on a regular basis. And thank you for your inputs. I wish that maybe you guys would allow me to not have to take the other side of it every single time. I mean, step up next time, would you guys? And come up with a reason why somebody should just do exactly what they were doing in 2024 and 2025. If you've been crushing it and you building passive income that exceeds your monthly expenses and you're spending way more time with your family than you ever have, please don't change that. Keep doing it. Teach other people how to do it. Share this with someone else. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.